Hey guys, hope you're doing well out there. Time to take a look at Microsoft Corporation, ticker symbol MSFT. This one now being the world's most valuable company, crossing over the $3 trillion mark. They reported their Q2 results after the bell. We'll get into the revenues, the earnings, the all-important growth rates on their different segments, including Azure, and then take a look at the technicals. This one has been, like all other tech stocks, been rallying really over the last 6 months and was set up at all-time highs heading into these earnings. We'll see whether this rally can really continue over at Microsoft based on these results. As always, if you're new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. It would be much appreciated. Shares of Microsoft up over nearly 70% over the past 1 year. You trace it back to February of last year. This one was closer to $250 a share, now crossing over $400 a share. That is on the heels of their Q2 results. Revenues coming in at $62 billion. Guys, to grow a business that is posting $62 billion in just 3 months at a clip of 17% year over year is not easy. The scale that Microsoft operates at and the fact that they're still growing those revenues at double digits, close to 17-18%, is absolutely astonishing. That also beat estimates on Wall Street by nearly $900 million. And then along with that top line beat, they came in with a bottom line beat of GAAP EPS at $2.93. That was a 16 cents beat on that bottom line. In terms of their different business segments, revenue in productivity and business processes coming in at $19.2 billion. That was up 13%. Intelligent Cloud coming in at $25.9 billion, up 20%. And then more personal computing coming in at 16.9, also up nearly 20%. So Microsoft just firing on all cylinders, basically growing across their business at a double-digit clip, somewhere between 13 to 20%. You look ahead over the next few years, this one basically on that bottom line is expected to continue to grow in that mid-teens. Does trade at a pretty steep valuation currently at 36 times this year's numbers on that price to earnings. But again, keep in mind, this is a highly efficient, highly well-run business that is expected to continue to just chug along and grow very consistently. You see the next 4 years expected to just continuously grow at that mid 14-15%, both top and bottom line. That is an absolutely consistent business that you pay a slight premium for. We covered this when we took a look at Visa. Very consistent businesses in the market absolutely deserve a premium. Microsoft is no different. Now, comments from the Microsoft CEO Satya Nadella were that they have moved on from talking about AI to now applying AI at scale. And let me tell you, a lot of companies in the marketplace still stuck at this stage of just talking about AI. Microsoft now looking to apply AI at scale, and certainly scale at Microsoft is massive. By infusing AI across every layer of our tech stack, they are winning new customers and helping drive new benefits and productivity gains. The other important thing that happened in this quarter was that Microsoft closed on their acquisition of Activision. You try saying that a couple times really fast and that is a tongue twister. That happened on October 13th. And then moving forward, financial results from Activision will be reported in the more personal computing segment. And so if we take a look down at their more personal computing segment, you see Xbox content, services, and revenues jumping nearly 61%. But keep in mind, 55 points of that was from a net impact from the Activision acquisition. And so we'll see Xbox content jumping rapidly, but keep in mind a large portion of that is from their acquisition. You see Microsoft Cloud growing at 24%. These are GAAP figures, but regardless, growth is growth, whether that's GAAP or non-GAAP. And so you had your Microsoft Cloud growing at 24%, the all-important Azure business growing at 30%. This was the number investors had their eye on. Anything really north of 27, 28% would have been very good to see over at Microsoft. They came in with 30% growth on Azure. You see Dynamics 365 growing at 27%. When Microsoft's saying they're incorporating AI into every part of their tech stack, this is what they mean. They can basically layer Copilot across their different business segments and just continue to charge more for those to their customers. And honestly, their customers are going to be willing to pay for it. When a business sees how much more efficient they can get with Copilot in their tech stack, why would they choose to avoid using that? And so Dynamics 365 growing at 27%, even LinkedIn growing at 9%. I'm sure they're looking to add layers of AI onto LinkedIn. Office 365 commercial growing at 17%. Windows OEM growing at just 11%. And then you have a slowdown in devices declining 9%. Even though PC sales were up in the month of December, I think devices and Windows OEM still not seeing the continued growth it once had. But regardless, that is being more than offset by the Dynamics 365, by the growth in Azure and then along with that, growth in Microsoft Cloud. Now, Xbox content and services you see up 61%. Keep in mind, a majority of that was from their acquisition of Activision. As we walk along these financials, you see exactly where that acquisition comes into play, mainly on their balance sheet and then cash flows. But first, taking a look at the income statement, you have nearly $62 billion of total revenue. That was up close to $10 billion from same time last year. We were closer to $52.7 billion. The cost of revenue is not moving all too much, up right around $2 billion. And so your gross margins expanding nearly $7 billion from an increase in $10 billion in your top line revenues. You see R&D not moving up all too much. This is again for 3 months ended. Keep in mind, $42 billion worth of gross margin for 3 months is not something to quickly gloss over. These numbers over at Microsoft just staggering. You see on a 6-month basis coming in nearly at $82.6 billion of gross margins. And then on top of that, we don't have a ton of operating expenses. R&D not taking up a whole lot. Sales and marketing similar, not taking up a whole lot. And then G&A actually going down year over year. And so you're generating $27 billion of operating income in 3 months. 6 months, you're getting close to $54 billion. This is again the consistency we speak of Microsoft. 27 times 2 gets you closer to this $54 billion number on that operating income side. Very consistent, very predictable business. Basically just chugging along. You generate $22 billion worth of net income. Last year, you were closer to 16.4. And then on a diluted EPS, you get $2.93. Last year, you were closer to $2.20. Weighted shares outstanding ticking down just a little bit. Microsoft does have a buyback in place, and they're kind of just slowly chugging along on that buyback. Now, in terms of their balance sheet, one thing does look off, and that is their cash and cash equivalents. This declining down to $17.3 billion. Last year, you were closer to 34, not even last year, actually, just 6 months ago, you were closer to $34.7 billion. And so their cash and cash equivalents almost cut in half. Short-term investments also down just a little bit. And so right away, you see Microsoft having to spend a fair amount of cash that is on that acquisition of Activision Blizzard. But keep in mind, that was an acquisition of nearly $65 billion. And so how did Microsoft pay for the rest of it? And that is by issuing short-term debt. They issued roughly $27 billion worth of short-term debt. You see just over the last 6 months, they were sitting on no short-term debt. And then they also increased their long-term debt up to $45 billion last year, or pardon me, 6 months ago. You were closer to $42 billion. And so the balance sheet over at Microsoft, not looking like it once used to, still looking fairly good, sitting on over $147 billion worth of total current assets. Total current liabilities coming in at $120 billion. So from a balance sheet perspective, still looking fairly strong, but not in the position it once was. And so what Microsoft is going to have to do over the subsequent few quarters, they're still earning a boatload of money. You see $21.8 billion worth of net income over 3 months. They're now going to look to have to pay back that debt, add to their cash pile over time. Not something that's of concern to Microsoft. They're earning still $18.85 billion of operating cash flows, again, in 3 months. In 6 months, that figure is close to $50 billion. And then in terms of financing activities, they issued some short-term debt, paid back a little bit of long-term debt, and then they're continuing on that share repurchase, buying back roughly $4 billion in this most recent quarter, continuing to pay off dividends up to $5.5 billion. Last year, you were at $5 billion. So you have that slight increase in the dividends over at Microsoft. And then investing activities, you see nearly $65 billion worth of net cash acquired. So here you have that acquisition of Activision really showing up on their cash flows. They basically invested $65 billion to pick that business up. And so starting off the year, they basically started with $80 billion in cash and cash equivalents. Ending off the period, they're at $17.3 billion. So having to spend quite a bit on that acquisition. But again, as you see, their Xbox content and services now rapidly growing at 61%, basically on their more personal computing. They can look to increase those revenues at a pretty rapid clip as a result of that acquisition. Now that more personal computing segment coming in close to $17 billion from a revenue perspective. So all things looking good over at Microsoft. Their balance sheet needing a little bit of work now that they've rolled over that acquisition. But considering how healthy and how strong this company is from an operating cash flow basis, I think just in a few quarters, this company will look to clear off that excessive amount of short-term debt. And so now looking at the technicals, this one basically was coming into earnings, rocketing higher, setting up over $400, well above all-time highs. And so from a technical perspective, this one is probably overextended for sure. And so I would wait for a deeper pullback, at least down to, call it $380 a share. I think that's your first level to pick up shares of Microsoft. There is a level of support at 380. That was a previous set of highs we made back in November of 2023. It also kind of meets up with this uptrending trend line. And so that would be my first step to get into shares of Microsoft. Again, I wouldn't be super aggressive at these levels. It is still at close to all-time highs. But I think from a buy and hold perspective, I think this could be a first dip buy where you maybe buy a fractional share or 1 or 2 shares in Microsoft. If it does head lower, closer to 340, I think that is a much better, deeper pullback where I would be looking to get into shares of Microsoft at a bit more aggressive manner. This one would still be in an uptrend, although the uptrend would have flattened out. And then from there, I think you can continue to channel sideways to moderately head higher. There's no real reason to sell shares of Microsoft at this level. I guess you could look to take some gains. But honestly, this company is really fantastic. It's chugging along just how you would expect, posting beats on both revenues, bottom lines, continuing to grow at a pretty rapid clip, continuing to grow Azure at an extremely fast clip of 30%. Really nothing wrong with Microsoft. They just rolled into that acquisition of Activision. That'll continue to help their Xbox content and services. And then you have CEO Satya Nadella saying that they're just starting to layer on AI at scale. And I think really that over the next few years will continue to be realized over at Microsoft. Although you can be tempted to sell shares at this point, I think the better thing would be to just sort of hold it, because this company really isn't giving you any indications of why to sell these shares. That was my take on Microsoft Corporation, one of the best companies in the world and now the most valuable as well, overtaking shares of Apple. We have Apple reporting on Thursday, so we'll see whether that one can retake the crown from Microsoft. Let me know your thoughts on this one in the comment section below. What are your thoughts on Microsoft north of $400 a share? Thanks so much for listening, and I'll catch you guys in the next video.